Hello, beautiful people, and welcome back to Boni's Life, your weekly dose of financial sanity in a world gone crypto crazy. I'm your host, Boni, and today we're diving headfirst into the blood-red sea of the crypto market. The past 72 hours have been a roller coaster, and the last 24, well, let's just say it's been a gut-wrenching, nail-biting, and for some, a portfolio-crushing experience. Bitcoin, the king of crypto, has taken a nosedive, dragging the entire market down with it. We've seen billions of dollars wiped out, and the fear and greed index is screaming extreme fear. But is this the end of the bull run? Is it time to panic sell and run for the hills? Or is this the massive fire sale discount we've all been waiting for? A golden opportunity to load up on your favorite digital assets before the next parabolic move? That, my friends, is the multi-trillion-dollar question we're going to answer today. We'll dissect the market with the precision of a surgeon, analyze the global events that are pulling the strings, and hear from the titans of the industry. The traders, the developers, the regulators, and the big shot institutions. So, grab your coffee, silence your notifications, and get ready for a deep dive into the chaotic, captivating, and potentially life-changing world of cryptocurrency. This is Boni's Life, and we're about to make sense of the madness. Alright, let's pull back the curtain and look at the damage. The last 3 days have been a brutal reminder that the crypto market is not for the faint of heart. It's a volatile beast, and it has been on a rampage. Let's start with the king, Bitcoin. Just 3 days ago, on November 2nd, Bitcoin was comfortably trading around the $110,014 mark. Fast forward to today, November 5th, and we're looking at a price of $99,075. That's a drop of over 10% in just 72 hours. A gut punch for anyone who bought the top. And it's not just Bitcoin. The entire crypto market has been bleeding. Ethereum, the queen of crypto, has followed a similar, if not more dramatic trajectory. From a seemingly stable price of around $3,900 3 days ago, it has plummeted to its current price of $3,371. That's a staggering 13.5% drop. The altcoin market, as is often the case, has fared even worse. We've seen double-digit losses across the board, with many smaller projects seeing their valuations slashed by 20 to 30% or more. To put this into perspective, the total cryptocurrency market capitalization has shrunk from over $4.1 trillion to just $3.62 trillion. That's nearly $500 billion in value that has vanished into thin air. It's a sea of red out there, and it's easy to feel like you're drowning. But as seasoned sailors of these treacherous crypto waters, we know that every storm eventually passes. The key is to understand the storm, navigate it wisely, and be ready for the calm that follows. And that's exactly what we're going to do. Now, let's zoom in. The last 24 hours have been the most intense period of this downturn. This is where the real story unfolds. We saw a cascade of liquidations, a flurry of fear-inducing headlines, and a market sentiment that swung from cautious optimism to outright panic. Let's break it down, starting with the fundamentals, the why behind the wipeout. So, what lit the match that started this inferno? It wasn't just one thing, but a perfect storm of factors that created a tidal wave of selling pressure. First, and most importantly, let's talk about liquidations. Over the past 24 hours, a staggering $1.71 billion in leverage positions were wiped out. That's billion with a B. According to data from CoinGlass, 429,361 traders got liquidated. Think about that for a second. Nearly 500,000 traders had their positions forcibly closed because the market moved against them, and the vast majority of these were long positions, traders betting on the price going up. A whopping $1.29 billion of the liquidations were longs. This creates a vicious cycle. The price drops, longs get liquidated, which means their positions are sold, which pushes the price down even further, triggering more liquidations. It's a death spiral that can be incredibly difficult to stop. The largest single liquidation order was a $26.06 million position on an ETH-USD pair on the hyperliquid exchange. Someone, somewhere, lost a fortune in the blink of an eye. This is the brutal reality of trading with high leverage. It can amplify your gains, but it can also, and often does, amplify your losses to a catastrophic degree. This is a lesson I want everyone to internalize. Leverage is a double-edged sword, and in a market as volatile as crypto, it can be a financial guillotine. If you don't understand it, or if you're using it recklessly, you're not trading, you're gambling. And the house always has an edge. Now, these liquidations didn't happen in a vacuum. They were triggered by a potent cocktail of negative news and macroeconomic headwinds. The biggest ghost at this feast has been the lingering uncertainty around global economic policy. We had comments from Austan Goolsbee, the president of the Federal Reserve Bank of Chicago, who expressed his nervousness about inflation. He stated that the threshold for interest rate cuts is now higher than it has been. For a market that has been desperately hoping for a pivot to easier money, this was like a splash of cold water to the face. Risky assets like crypto thrive on cheap money. The suggestion that the money printer might not be warming up anytime soon was enough to send a shiver down the market's spine. Adding fuel to the fire, we had warnings from Wall Street titans. Goldman Sachs CEO David Solomon predicted a potential 10 to 20% drawdown in equity markets, and Morgan Stanley's CEO Ted Pick echoed a similar sentiment. When the big suits on Wall Street start talking about drawdowns, it creates a risk-off environment. Investors start selling their riskiest assets first, and right at the top of that list is cryptocurrency. It's a flight to safety, and in times like these, cash or less volatile assets is king. And then there was the ghost of October's pest. The market was still processing the aftershocks of the Trump tariff crisis from early October. You'll remember that President Trump's threat of 100% tariffs on Chinese imports triggered a massive $19.13 billion liquidation event. As Nick Pukrin, the CEO of the Coin Bureau, aptly put it, the unprecedented sell-off was a clear sign that cryptocurrencies are a part of the wider financial ecosystem and therefore affected by the same macro drivers. The market is still fragile from that event, and any new sign of instability is met with a swift and brutal reaction. So you have a market already on edge, you add in a dash of hawkish Fed commentary, a sprinkle of Wall Street pessimism, and a massive dose of leverage liquidations, and you have the recipe for the 24-hour bloodbath we just witnessed. It's a complex interplay of factors, but it all boils down to one thing: fear. And in the crypto market, fear is a very, very powerful force. Okay, so we've covered the why. Now let's get into the what. What are the charts telling us? This is where we put on our technical analyst hats and try to find some order in the chaos. And let me tell you, the charts are painting a very dramatic picture. Let's start with Bitcoin. The most important level on the chart right now is, without a doubt, $100,000. This isn't just a big, round, psychological number. It's a critical support level that has held strong since June. Think of it as the floor of the market. We've bounced off this floor several times, and each time it has held. But here's the thing about floors. If you keep hitting them with a sledgehammer, eventually they break. We are currently testing this level again. The bulls are fighting tooth and nail to defend it, but the repeated tests are a sign of weakness. If we break below $100,000, the next major support level is all the way down at $96,000. That's another 4% drop from here, and it could trigger another wave of panic selling. On the upside, if we can hold the $100,000 level and bounce, the first level of resistance we need to break is $105,000. This was a support level at the beginning of October, and now it's acting as a ceiling. If we can break through that, the next major hurdle is $112,000. According to crypto analyst Michael van der Poppe, this is the crucial level. A break above $112,000 could signal a reversal and a potential move towards a new all-time high. Now let's look at the indicators. The relative strength index, RSI, on the daily chart is currently in oversold territory. For those of you who are new to this, the RSI is a momentum indicator. When it's oversold, it means the asset has been sold off too much too quickly and a bounce is likely. This is one of the few glimmers of hope for the bulls right now. It suggests that the selling pressure might be getting exhausted. However, the moving average convergence divergence, MACD, another momentum indicator, is still showing bearish momentum. So we have conflicting signals, which is typical in a market that is at a major inflection point. It's a tug of war between the bulls and the bears, and right now it's too close to call. Now, let's turn our attention to Ethereum. The story here is similar but with a few key differences. ETH has also been hammered, and it's currently trading around the $3,330 support level. The RSI for Ethereum is also deeply oversold, even more so than Bitcoin's. This suggests that Ethereum could be due for a more significant bounce if the market turns around. However, the MACD on the Ethereum chart has just printed a death cross. I know it sounds dramatic, but in technical analysis, a death cross is a strong bearish signal. It happens when a shorter-term moving average crosses below a longer-term moving average, and it often precedes a significant downtrend. This is a major red flag for Ethereum, and it suggests that any bounce we see might be short-lived. So, what does all of this mean for the next 24 hours? It's going to be a critical period. For Bitcoin, all eyes are on the $100,000 level. If it holds, we could see a relief rally towards $105,000. If it breaks, look out below. For Ethereum, the $3,330 support is key. If it holds, we could see a bounce towards the $3,500 to $3,600 range. But with that death cross looming, any rally should be treated with caution. This is a time for patience and discipline. It's not the time to be making rash decisions. The market is on a knife's edge, and the next 24 hours could determine the direction for the rest of the month. So, keep your eyes on the charts, manage your risk, and don't let your emotions get the best of you. In times of turmoil, it's crucial to listen to the voices of experience. So, what are the big players, the market wizards, and the institutional giants saying about this crash? Let's tune into the frequency of the experts. First, let's talk about the institutional perspective. The mood on Wall Street is decidedly gloomy. As we mentioned, we have David Solomon, the CEO of Goldman Sachs, warning of a potential 10 to 20% drawdown in equity markets. This creates a risk-off sentiment that spills over into crypto. But the more immediate concern is the behavior of the new wave of Bitcoin treasury companies. These are the public companies that have been raising debt to buy Bitcoin. We now have the first instance of one of these companies, Sequence, selling off a portion of its Bitcoin holdings, nearly 1,000 BTC, to pay down its debt. This is a worrying precedent. As Corey Klippstein, the CEO of Swan Bitcoin, pointed out, many of these companies are highly leveraged. If they can't raise more capital, they may be forced to sell their Bitcoin, which could trigger a cascade of selling pressure. David Duong, the head of investment research at Coinbase, has also sounded the alarm, noting that these Bitcoin treasury companies have largely ghosted the post-October 10th drawdown. In other words, the institutional buying that was supporting the market has dried up. This is a significant shift in market dynamics. Now, let's turn to the traders and analysts who live and breathe these charts. The sentiment here is more mixed. Ray Youssef, the former CEO of Paxful, describes the current market as being in a classic exhaustion phase. He notes that positive news has no noticeable impact on the price, while any negative news immediately leads to sell-offs. This indicates a weakness in buying pressure and a reluctance from retail investors to buy the dip. On the other hand, we have analysts like Michael van de Popper, who sees this as a great buying opportunity. He believes that as long as Bitcoin stays above the key support levels, the long-term bullish structure remains intact. He's looking for a break above $112,000 to confirm a new leg up. And what about the regulators? The SEC is still in the process of charting the cost for crypto regulation in the US. The recent government shutdown delayed some key decisions on crypto ETFs, but the industry is still hopeful that we will see a spot Bitcoin ETF approved in the near future. This remains one of the biggest potential catalysts for the market. So we have a divided jury. The institutions are cautious, the traders are split, and the regulators are still playing catch-up. It's a complex and uncertain environment, and it's a reminder that in the world of crypto, there are no easy answers. While Bitcoin and Ethereum have been taking a beating, the altcoin market has been a scene of absolute carnage. It's a bloodbath out there, and many promising projects have seen their valuations decimated. But as any seasoned crypto investor knows, this is where the real opportunities can be found. When the market panics, everything goes on sale. So let's sift through the wreckage and see what's been happening in the world of altcoins. First, let's talk about Solana, SOL. Solana has been one of the darlings of this bull run, with its high transaction speeds and growing ecosystem of dApps, but it has not been immune to this downturn. SOL has dropped from over $200 to its current price of around $160. That's a 20% haircut in just a few days. The technicals for Solana are similar to Ethereum's. It's deeply oversold, but the bearish momentum is strong. The key level to watch for Solana is the $150 support. If it can hold that, we could see a nice bounce, but a break below could see it heading towards the $120 region. Next up, let's look at XRP. The XRP army is one of the most passionate communities in crypto, but even their diamond hands have been tested. XRP has fallen from around $1.20 to its current price of 95 cents. The ongoing legal battle with the SEC continues to cast a long shadow over XRP, and in a risk-off environment, investors are less willing to hold an asset with so much regulatory uncertainty. The key support for XRP is at $0.90. A break below that could be very bearish. And what about Cardano? ADA. Cardano has been a bit of a laggard in this bull run, and this crash has not been kind to it. ADA has dropped from $2.10 to its current price of $1.70. The Cardano community is eagerly awaiting the rollout of more dApps on the platform, but the development has been slower than many had hoped. The key support for ADA is at $1.50. This is a must-hold level for the bulls. It's a similar story across the altcoin market. We're seeing major corrections in projects like Polkadot, DOT, Dogecoin, Doge, Shiba Inu, SHIB, and many others. The meme coins in particular have been hit hard. When the market gets serious, the joke coins are often the first to be sold. But here's the thing about altcoins. They are much more volatile than Bitcoin and Ethereum, both on the way up and on the way down. This means that when the market turns, they can bounce back much faster and much harder. The key is to identify the projects with strong fundamentals, active development, and a passionate community. These are the projects that will survive the storm and thrive in the long run. This is not financial advice, but in a market like this, it's a good time to be doing your research. Look for the projects that are still building, still innovating, and still delivering on their promises. Those are the gems that can turn a market crash into a life-changing opportunity. It's a high-risk, high-reward game, but for those who are willing to do the work, the potential rewards are immense. So, after all of that, what's the verdict? Market meltdown or monster buying opportunity? The truth, as is often the case, lies somewhere in the middle. What we're seeing is a much-needed market correction, amplified by excessive leverage and macroeconomic fears. It's a structural clean-out, a flushing of the system. And while it's painful in the short term, it's ultimately healthy for the long-term sustainability of the market. For the next 24 hours, the market is on a knife's edge. Here's what I'm looking at for a potential trading strategy. This is not financial advice, but simply how I'm interpreting the data we've discussed. For Bitcoin, bullish scenario. If we see a strong bounce off the $100,000 support, confirmed by a break above $102,500 on high volume, I would consider that a potential entry for a long position. My target would be the $105,000 resistance level with a tight stop loss just below $99,000. A break off the $100,000 support would invalidate this setup. Bearish scenario. If we break below $100,000 and hold below it, that would be a signal for a potential short position. My target would be the $96,000 support level. I would be cautious with this trade as the RSI is already oversold and we could see a sharp reversal. For Ethereum, bullish scenario. Given the oversold RSI, I'm looking for a relief rally. If we can hold the 3,330 support and see a convincing move above 3,400, I might consider a quick long position with a target of $3,500 to $3,600. However, given the death cross on the MACD, I would be very quick to take profits and would not hold this position for long. Bearish scenario. A break below $3,300 would be very bearish for Ethereum. I would not be looking to short it immediately, as it's already very oversold. Instead, I would wait for a potential bounce to a resistance level, like $3,400 or $3,500, and look for a short entry there if the bounce shows signs of weakness. Ultimately, the most important thing you can do right now is to manage your risk. Don't make emotional decisions. Have a plan, and stick to it. If you're a long-term investor, this could be a great opportunity to dollar cost average into your favorite projects. If you're a trader, be nimble, be patient, and wait for confirmation. The crypto market is a wild and wonderful place. It's a place of incredible innovation and also a place of incredible risk. But for those of us who are passionate about this space, it's a journey we wouldn't trade for anything. So stay strong, stay informed, and stay profitable. That's all the time we have for today on Boni's Life. Thank you for joining me on this deep dive into the crypto market. If you found this video helpful, be sure to hit that like button, subscribe to the channel, and ring that notification bell so you never miss an episode. And let me know in the comments below what you think. Are you buying, selling, or holding? I read all of your comments, and I love hearing from you. Until next time, this is Boni signing off. Stay blessed, and I'll see you in the next video.